Good afternoon, everyone. Welcome back to the commodities update video. This is where we do analysis on natural gas, UNG, as well as oil, gold, and silver, as well as the US dollar. So we'll be doing at support and resistance levels to potentially play off of and looking to see where it might bounce and where it might reject for the price and what's most likely scenario. Price will be heading into later next week. And let's get started. So I've been traveling for the last little bit in Asia. I'm currently in Taiwan, so I haven't been able to do a lot of videos, but I'll try to squeeze them in. I'll be gone for another 2 weeks. But yeah, let's take a look at natural gas. So natural gas, last time I did a video would be on Friday. So we were over here. And I said that pretty much, I remember saying that if we do backtest this downtrending resistance right here, this mirror looking line, which is our prior resistance, you can see we rejected from there, rejection from there, and the rejection from there. So if this is prior resistance, what we want to see is now acting as support when we touch at that level. So that downtrending mirror looking line also coinciding with the 3.13 level right there gave us a confluence of signal where natural gas may likely bounce. And I said that I want to see an hourly uptrend before we can more confidently say that this will hold as support. So let's take a look at Monday bounce. So it was hourly bounce was here. You can see we set the pivot low, meaning this low is higher than the prior low. So that's the pivot being set. And then once we break out of that, you can see we breaking out the prior high. That's an hourly uptrend confirming. And it was a good sign because when we had the hourly uptrend confirm, we also back tested the support again, bounce higher. And you can see a ton of follow through today from the bulls. So where would the next question we got to ask ourselves is, where is the bulls going to stop at this current bounce? And you guys know where I talked about the equilibrium for many weeks, actually, when we had a big move up and a big move down. I said the most likely scenario, if we do break 50% of the retracement, which we did, is an equilibrium, meaning each move tightens up into a smaller than the prior move. And that's what the equilibrium is. And so far, we're getting that because you can see big move up. The drop is within the bounce, and currently the bounce is also within the drop. So what I want to see is an hourly downtrend confirming for us to mark the potential top of this bounce. So when we zoom in, right, we go to the hourly chart. We don't see any of that yet, right? We can see a little bit of rejection at this level, a couple of upper wicks, but that could just be a bull flag, right? Just measure from the bottom of the move to the top of the move. We barely retraced anything. As long as we stay above 0.382, which is this yellow box, 38.2% retracement is a bull flag. And we definitely need more price action for us to say we have any kind of rejections up here. Currently, it's, no signs of red flags for the bulls at this given moment. And let's take a look at the 5 minutes. Yeah, just pretty much just flagging. So no signs of that yet. And we are starting to approach that equilibrium range, meaning if we're going to form an equilibrium, we're not going to get over this high. But if we do get over that high, we will come back to test this uptrending resistance line, which is this. See this mirror looking line right here? Support, resistance, because we're prices under it now. Resistance, 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 resistance. So it's been resistance for 7 times, right? So the most likely scenario, if we do come up here, is probably going to act as resistance again. It doesn't mean that we're never going to break it. It just means that the initial move will be something very similar to this, where it would at least slightly reject, and then it'll see if the bulls are serious about taking this higher or not. If not, then we roll back, right? You can see that bulls gave it a couple of chances here with all these upper wicks, testing that resistance, seeing if we can break it or not that time. So if we don't make a new high, higher than this high, then the most likely scenario is an equilibrium. If we do make a new high and test this level, we're likely going to come, if we break this level, obviously we come up to test this uptrending resistance line. So those are 2 levels I'll be looking at. And of course, we need to break this 3.5 and 3.62 first before we even talk about this one. Cluster of resistance here as well. You can see because of the amount of times we've been trading up here. That's why there's more resistance up there as well. So right now, no signs of slowdown at this moment. We need definitely more price action for me to say that this is going to be a temporary top. Even if we get something like this, like a pullback like that, it's still in a bull flag, right? If we just start to pull back and get a shallow bounce and then come from hourly downtrend like that, then I would say, okay, this is probably the top of that equilibrium bounce. Shape up like that, right? Let's see. No, Monday, tomorrow, and then we'll get more actions. Give us more clues about that. All right, UNG. UNG is a tradable ticker for natural gas. So it's very similar to natural gas. You can see this was downtrending resistance line here. We got pretty close to testing it again. And same thing, that equilibrium look shaping up as well. We did slightly break the 200-day moving average, which is the yellow line there, but we never really got a clear break, and we're coming up to it as well. So if natural gas goes up another leg, we're probably going to come up to test this 7.41 as well as, which coincides with the 200-day moving average. So that means the confluence of resistance at that level. You can see resistance, all these resistance levels, right? Which is also going to act resistant with that yellow line at the same time when we reach there. Unless we get a clear break to breaking these two levels and coming up here, I don't see UNG really breaking the 200-day moving average at the moment. So we'll see how natural gas breaks this resistance. If it can get a clear break above those levels, then UNG will likely come up to this level as well. Let's see about that. All right, let's take a look at oil. Okay, let's take a look. Oil is also looking to shape up that equilibrium as well. I think I remember talking about this one as well. Big move up, big move down. Most likely scenario is an equilibrium because we didn't make a new high. See how this high is lower than this high? Is a tiny range within the prior range. Hence, we pretty much give back most of it as well. And now you can see that the tiny range is continuing, right? Big move up. The move is within the prior move. This bounce is within the prior drop. This drop is within the prior bounce. Very clear equilibrium here. And it could obviously just roll over or bounce back up, but the most likely scenario is probably a little bit more tiny range continuing. And they just use the daily trend as our guide, keeping things simple. So when it was in a daily uptrend, right, we just keep it simple and let it go up till that equilibrium range. And same thing, right now we're in a daily downtrend. We'll just let it do its thing until it hits its resistance. Sorry, support. So if you wanted to be more clear on those tiny ranges, you can pretty much just make these lines like a triangle because it's an equilibrium. And you just kind of measure it, and you'll roughly know where that equilibrium will most likely bounce or get reject. So we come down to pretty much, this is pretty close to that already, right? You can see bounce, bounce, bounce. Technically, we can adjust this more like that. Just depends how you draw it. But the idea is that it's a tightening range. It just gets tighter and tighter. That's all you need to know because these triangles, trend lines can be drawn differently by everyone. So you don't want to use these as like a definite entry point or a or exit point. But it's a good place to get an idea of where the most likely scenario that the price action would bounce, right? Because we know it's an equilibrium. So when price comes down to these levels, there's a good chance it will bounce or reject from these levels, right? So we'll see. Right. So let's take a look at the hourly trend here. Yeah, very choppy. Same thing is just tightening up as well in the hourly. Let's see a tiny range right here. It will break tomorrow for sure because we're pretty much at the end of it. So if this breaks bull, then we'll know that it's marking the bottom of that tiny range because it's pretty close to the bottom as well. And we'll probably bounce closer to this 78.8 zone first. It's a weak bounce. We may get a bear flag on the daily and then potentially break through that. We'll see about that. All right, take a look at gold. Okay, so gold is still trading at its top of the range. Huge bounce due to macro environment. This gold is a safety asset and confirm its daily uptrend as well. Currently testing 1983. Very clear level resistance. Very, very clear. You know, see how many support bounce off here? pretty much like 10 times, rejected here 10 times. So it's a very clear support and resistance level right there at 1985. So far, we have rejected from it, but we're still pretty much just on it. It's a bull flag at the moment. And as long as it's making bull flags every time it goes up, then it will continue. So we'll see if gold bulls wants another leg up. Let's see here. Hourly trend still intact, so no signs of red flags. So could be, yeah. If I were to bet on it, I would say probably go up more than go down. But we are at a key resistance, so unless I get a clear break on it, I want to see it close. I want to see a candle close above 1985 for a clear break, not just a candle wick above it. See, we have wick above it twice. It's 3 times already, and still hasn't really closed above it. If we do close above it, then we are likely coming back up to this zone for a test. Hourly uptrend is going to be our guide, as long as the hourly uptrend intact. No signs of red flags. All right, so you look at the US dollar. So the US dollar is talking about head and shoulders back here, and then it sort of did it, but it got negated when it starts chopping around like that. It just doesn't look as good. But the idea of a head and shoulders is a uptrend into a downtrend. That's all we need to know. The pattern, because an uptrend into a downtrend is what a head and shoulder is. So far, we're getting more of like a megaphone look on the downtrending resistance line. You can see we have bounce off of it like that. Bounce, bounce, bounce. So we did confirm an hourly downtrend. Sorry, daily one. This was a daily mini day downtrend right here. So this is the first time a daily downtrend confirmed, and we had some follow through, broke through the neckline, but bulls pretty much took over, as a megaphone feel to it. So you can just cut through that, and you can see resistance, resistance, resistance. Megaphone looks like that's a megaphone pattern, meaning we hit lower lows and higher highs with no follow through both sides. So you can see this high was higher than this high, right? This high is higher than this high. So we hit a new high without follow through. Same thing. This low was lower than the prior low, and this low was also prior low. Every time we get a candle just straight through a low, new low, it reverses right away to the next side. So it's one of the most frustrating patterns for any trader on any assets. It's lack of follow through on each side. Yeah, so the dollar is shaping up a megaphone, and we'll see on the hourly. Let's see here. We have a big enough drop where this could potentially come from an hourly downtrend. So if we do come from an hourly downtrend, then that likely marks the top, which is perfectly coinciding with the megaphone resistance as well. The hourly chart is very clear. Resistance, 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 support, 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 support. See which way it ends up breaking. It could break above, then we'll know that this megaphone pattern is negated, or we can break below it, depending on macro environments, of course, especially the dollar. All right, silver. Silver is a lot weaker than gold. As you can see, gold is trending at its 52. Is it 52 high? No, at its current highs, but silver is not. So, although silver is holding slightly above 12 EMA, so it's a good sign, but is on the verge of confirming an hourly downtrend. So there's a big enough drop now where if we don't get above on this bounce higher, then we can potentially roll over and break this low for an hourly downtrend. It's also giving me a little bit of megaphone look as well on the hourly. You can see a slight support over here and a bunch of resistance over here. So we'll see which way it breaks out of this little megaphone on the hourly time frame. Yes, we will know. If it does break below that, then we're getting an hourly downtrend confirming. Also, but we need to see some weakness from gold before silver. Silver may roll over first because silver usually leads. Silver bounces first as well. You can see silver first bounce, then gold leads. So we'll see if silver rolls over and chances of gold breaking above this 1985 strong resistance will likely be negated. So we'll take a look at silver for more clues for gold. All right, that's all for you guys for commodities, and I'm gonna head over to record the stock market of the video. There's a ton to talk about in the stock market these days. And so if you guys are looking for stock market of videos, we're on QQQ, S&P 500, Tesla, Nvidia, Apple, Amazon, Google, Microsoft, and Meta. Make sure to head over there on my next video, as well as feel free to join the free Discord link. Come over and just chat, talk about whatever you want, talk about stocks, and yeah, just come join the link. Everything is free. It's in my YouTube bio, I think. And yeah,